Peter, how has the portfolio performed during the pandemic? Are you pleased with the outcome?
Well, I mean, we're never pleased when portfolios, deliver negative absolute returns. But clearly, this has been a major shock to the economic system, and many companies are suffering, and so equity markets have fallen. I am pleased though that relatively, this fund has outperformed the UK benchmark, which is great because it continues a long track record of outperformance of this strategy. Part of that is driven by the sectors we don't hold. So we don't hold any oil, which has suffered really badly. We don't hold any airlines. We tend to be underweight, where we are underweight a lot of consumer-facing sectors, and so the fund has held up pretty well. I think in particular, if you look at areas where the fund has done well, it's companies involved in what we're doing at the moment, which is remote working, supporting the online world, connecting people, which has done a huge amount to mitigate the impact of the lockdown. So we're pleased with how the fund has shown itself to be resilient, and longer term, we expect our companies to recover from this and to do well. But we have to now take a sort of longer term view to get back to positive absolute returns.
Obviously, you mentioned markets. Everybody knows markets have come off sharply. Have you been taking advantage of lower share prices since the coronavirus outbreak? And if so, can you mention some of the stocks that you've added to the portfolio?
Yeah. So, I mean, the first thing we did when it was clear that this pandemic was going to lead to a severe economic shock, and that was in sort of mid-February, was to look at all of companies within our portfolio and to analyse them to sort of say, okay, first of all, are they going to be able to survive a period of low or no revenues? How's their balance sheet? And then to think in a post-lockdown world, are these companies going to be able to emerge into a strong market? And so should we be backing them into the future? And I'll give you an example of one that failed that test. And there was a company called Cineworld, which we held in the portfolio. And our view was that in this new environment, the new news, which we had to incorporate into our investment thesis, that company, in spite of its incredibly low valuation, was really at risk in terms of the balance sheet point of view. That embarked on a large acquisition which really stretched their position. And also we were looking at the movie cinema world post-lockdown, and we felt that there's a real structural acceleration in decline there. So we exited from that position, which clearly had not performed well till then, but we feel it's better to cut and put your money into more robust businesses. And on that side, we have had many companies that have been severely affected. One of them is Compass Group. Now, Compass Group provides a lot of food services, so food to organisations from businesses to sports events, to entertainment, and clearly that is going through a terrible period globally now. I mean, it's an unimaginable hit to their economy. But looking as we come out of this, even with increased working from home and maybe fewer people gathering at events, we still think there's a fantastic business there, and they're leading in the way that they source their food, the way they're pushing for healthier food to be eaten in their canteens. So that's a business we've backed. Equally, we are Looking still across the world at businesses, and one company we've increased our position in is a company called Helios. Now, Helios owns and operates mobile phone masts, and the idea is that they provide a network which all the mobile phone operators can share. And it's, the name of the game is to increase the number of mobile phone operators on each mast, and then your returns go up very solidly. Now, Helios operates not in the UK, it operates in Democratic Republic of Congo, Tanzania, and Ghana, which are areas where you've got fast population growth, you've got great growth in urbanization, and importantly, there's no landline competitor. These are countries which have made the sort of leapfrog in telecommunications, where they rely entirely on mobile, almost entirely on mobile for their internet and telephony services. So we think that company's got a great future ahead of it, and so we've added to that. One other company which is UK focused is Trainline. Trainline do the ticketing for rail and bus services in the UK and make it the whole mass transport system that much easier. Clearly going through a terrible time at the moment, but we think it's got dominance, it's got market share growth which will more than compensate on a 3-year view for the decline in revenues at the moment. So that's a company as well that we've been adding to and backing. So those are the main changes in the portfolio, but it hasn't been a sort of drastic shift because we're pretty happy with the portfolio as it is.
The pandemic will change the way we live and behave, perhaps once things return to a new normal, whenever that might be. So greater emphasis on all sorts of things socially. But I mean, do you think part of that might be a greater emphasis on ethical investing in this post-COVID world?
We think definitely. We think that this, when we look at our themes, and we have 20 themes which drive our investment strategies, and we've sort of scanned them. We think, is this pandemic actually going to make the companies in these themes, the trends stronger, and their likely success in the future greater? And for the vast majority, we do. I mentioned connecting people. As we do more and more remote interaction, more working from home, so demand for those sort of services will go up. When I look at, we talked about insurance and savings. I think that's going to be more at the forefront of people's minds. At the expense perhaps of some of the sort of more discretionary items that people buy. But I think maybe more optimistically, when we look at things like the taste that people have had in cities of clean air, car-free streets, we think this kind of helps governments and local authorities to sort of say, well, actually, that was pretty nice. That was a good environment. That's something we want to have more of. And so we see that trend accelerating. And an interesting anecdote is that we invest in National Express Group. And National Express Group do buses and coaches in the UK, as well as operations in the US, Spain and Morocco. But in the UK, they have committed to never buying another diesel bus. And they sort of looking for government support to help them make the shift in terms of the capital expenditure they need to move to fuel cell and electric buses. But we asked them, is government retrenching from that? Is the government sort of saying, look, we haven't got any money for any of these green initiatives? And they said, actually, the opposite. The government are looking for schemes whereby they can back this move to a more sustainable economy, which is one which is better for all of us. It's great to have this cleaner air, and to have less congestion in our cities. It makes them so much more livable. But then the final point is that I think what the pandemic has shown, all too clearly, is our vulnerability. As a global society, we have been laid low by a tiny strand of RNA protein, and that has caused such damage to our global economy. And we're coming together and we're managing that, and I've no doubt that we will come through it, and there will be changes to the way we live. But when you sort of then think about something like climate change, and you think about the impact that can have, this is, they're very different in many ways, but they're also very similar in that climate change is a global problem. It's something that scientists have been warning about for many, many years. There are solutions out there. The solutions exist. And I think this will only encourage governments, individuals, companies to invest that much more in mitigating and avoiding what could be, given what the science is showing us, an incredibly dangerous situation to put ourselves in terms of allowing the climate to warm more than 1.5 degrees. Certainly for the next generation and their children. So we think there are many aspects of our world which will make people sort of think, actually, this ethical, sustainable investing, that makes such a lot of sense. It matches my principles, but I also get how it works as an investment proposition, and that really would be our wish.
So if that is the case, and there are lots more people wanting to get involved or invest ethically, well, I mean, whether they be existing investors or new to investing, what advice would you have for a retail investor who wants to begin investing based on their own principles?
My first advice would be, do it. Because the option of doing nothing means that you are almost certainly investing in companies which you will find unpalatable. So that's my first word of advice. Yes, there are a lot of ethical and sustainable investment strategies out there. Many more have emerged over the last few years. So I feel sympathy with investors, retail investors, sort of scratching their head and thinking, God, well, which one do I go for? I would suggest the following checklist. I would look at the team who manage it, and I would look at their pedigree. So how long have they been managing these funds? What experience do they have? We feel we've been through several crises and market shocks. We have a good understanding of how to make these funds resilient and deliver strong performance. I would also look at how they make their investment decisions. So is sort of ethics and sustainability, is it just a sort of light dusting on top? Is it something you just sort of sprinkle a bit of icing sugar on top of it? Or is it the actual cake? Is it what you have at the heart of your investment process or the team has the heart of their investment process? And finally, I would have a look at the portfolio. Look at the companies in the portfolio. And if you look at the list of companies, we disclose every single company we hold, and there are some in there which you kind of raise an eyebrow at and think, I wonder why that's in there. Then write to the company, write to the asset manager. We love getting feedback from our clients or from advisors to sort of say, our client would like to understand a bit more about why you hold Smurfit Kappa, and that's if the investment managers can explain that very, very clearly, then you can probably rely on them doing the right thing by your investments in delivering you strong returns, but doing so in a way which matches your principles.
Peter, that's great advice. And thank you very much for joining us today. That's been fantastic.
Thank you. It's been a pleasure.